Good morning, everybody. It's been a bouncy, rough, rocky weekend. We'll try piece it all together. We are having markets started really kind of ugly this morning, but just over the last 20 minutes, Bitcoin shot up $3,500. We're not sure why. Everything is rebounding kind of fast. Proxies are back. Circle is back. Mag 7 is arising. And there's a lot to cover today across many different topics, geopolitics, macro, safe havens, fastest horses, and so much more, including some very bizarre lightning round questions towards the very end. So be prepared for those. We always pry some nuggets out of these gentlemen here and their great minds. So first of all, let's go around the horn. Welcome to Coffee with Friends. Mando, how you doing?
Great. Had a weekend of monitoring the situation, as everyone in my group chat for as well. So 2 days of that, recovered, and yeah, it seems like a nice start to the week, at least for crypto. So heading back up towards the top end of this range we've been in for the last few weeks. Yeah. Maybe a shot of breaking out. It looks decent here.
Yeah, I saw that meme, monitoring the situation, isn't it? It's a meme now.
Oh yeah, monitoring the situation is like it's very, very movable at this stage.
Yeah, we saw actually record numbers on X, record numbers of activity and users and all that crazy stuff. It's probably you and your circle driving that over the edge. CTO, what's going on outside the window?
Yeah, exactly. Let's see.
Sun is still up, which is good.
Here. But yeah, no, it's great. Great life in Bitcoin today. Very excited to see what's happening from here. And yeah, of course, a lot of turmoil in the world. And I thought to say this because I've lived in a lot of places where there have been, risks for things. In practice, those things never happen. You're not going to walk out and a drone is going to fall on your head. Those things in practice never happens. It's spectacular and it feels very worrying and like it's emotionally taxing. But in reality, those are not the things that's happening. You're far more likely to have a heart attack worrying about it than for something like that to actually happen. So if someone is in those areas, I think, take a cup of coffee or a tea and take it easy. It's going to be all right.
Yeah, that is a good point. And Marty, what do you make of all of this situation? Were you monitoring as well over the weekend? I'm sure you were.
Yeah, I mean, we kind of knew this was going to happen. Monitored all over the weekend, reporting the news constantly. I have a lot of contacts in the Middle East on Telegram, and they were sending videos, just awful videos as it happened. People were, disbelief that Dubai was getting hit, but clearly it was. I mean, Iran has attacked 15 countries, directly or indirectly. So pretty insane stuff going on. What I'm surprised at is this insane, beautiful reaction of Bitcoin. We're just about to hit 70,000, supporting a potential V-shaped recovery at this point. So we'll see. I think once we get over that psychological 70, we might see a lot of people start jumping back in.
Yeah, this is the highest we've been since I think about the 14th of Feb. So over 2 weeks ago. But we've been rejected from the 70K level many times before. And one of the things we'll tackle today is we've seen gold hit nearly 5,400 in the futures. We saw natural gas go up 52% overnight, oil up 10%. The question is, what happens after these types of things happen? Could at last, we've been waiting for years, maybe even a decade, for Bitcoin to become a safe haven. We don't know if that's going to happen, but let's get into the story. A lot to cover today. First of all, we will talk about big picture numbers, and I call this one worse than 2022, and I'll tell you why in a minute as well. But first of all, the cold open, again, Bitcoin. It was 66K when I wrote this, literally an hour ago. Saw 84. It's at a goal, 5,200, futures looking at 5,400, and gas and everything else. Let's go to our geopolitical correspondent, Marty. Talk to us. What does this all mean for us and the markets? And the big picture today as well, people sitting on cash, what do? Is it time to put your toe in the water, layer in, or what?
I mean, I think to me, the accumulation zone on Bitcoin is between 58 and 68. So we've exited that now. I think that was where most of the buying was going on. I see about $1 billion of ETF buying happened around there on Friday alone. So I think everyone is in. But I think what's interesting is during the war times like this, when everything's getting bombed, people start, the real fundamental use case of Bitcoin shines again. And that is its global transportable value. If you can't run with gold, you can't run with stock.
In fact, Iran was a great case in point where a lot of people lost their life savings. Banks just shut down. The currency went to zero. It was like a triple whammy. But there are some clever people that I know on the ground there that did have some Bitcoin exposure. But yeah, it's these types of situations is when you need Bitcoin more than anything else in terms of portability, etc.
The other interesting thing, James, is Iran is extremely prolific in Bitcoin mining. I mean, I think they mine Bitcoin for what, $1,500 or something, based on their power, their energy prices. So, and I think it's like 10 to 11% of the hash rate.
Correct.
So, yeah, that's another interesting facet of this particular war. I'd like to hear Mando's take on that.
Yeah. Mando, talk to us about energy and Bitcoin and safe havens.
Yeah, I mean, this may take, like you said, some of the mining capacity offline. Like we've seen that before when there was the strikes a few months ago that you saw the hash rate fall on the back of that. So this may help in terms of Bitcoin supply. That's definitely going to be part of this. I do think this in general. This last week we also had like the AI situation with like the block getting rid of so many different staff. So there's been this underpinning that we could be in for a situation where unemployment and we could see like money printing on the back of this. I do think that something like this, it does lead to a safe haven sort of demand as well. So gold obviously was one of the best performers of the weekend, and I think we've lost that correlation with gold quite a while ago, but it's good to see that come back here. I do think that this is a good situation, most probably for Bitcoin again. Like the fact that we didn't break down and then we're rallying one of the best performing things today, I think is a good sign. I still think we're in this 2024 range that we've been in, this 758 to 72K. So I'm sure CTO will be able to show us those charts again. So I wouldn't like get too bullish until we break out of that range, which is at 72K level. But the fact that we're just kind of forming a bit of a bottom here, I think is a good sign. I don't see anything here that looks like it's going to be that bad for Bitcoin. Right?
In fact, since Friday night, Bitcoin has held up very well. It didn't take a hit at all. So except for that one dip to 63K, but that was short-lived. That's probably the market makers piling on.
There's a report that says right after the initial strikes, there was a 700% surge in Bitcoin outflows from Iran's largest exchange, Nobitek. Millions of dollars moved out of exchanges to self-custody as people rushed to secure holdings amid uncertainty and potential internet power issues. There you go.
Yeah, good stuff. And this takes us back to exactly what's going on. What happens next? Like typically over the next 6 weeks, we see decisive moves to safe havens. But what I've noticed ever since I've been tracking things like markets and wars since 1990, every single time there is an event like this, the recovery is far faster. So in the old days, it used to take 4 to 6 weeks for things to recover. Sometimes it takes 48 hours these days. And this takes us to what to play in during this time. So if you look at after an energy supply shock, oil supply shock, etc., asset performance, oil, of course, goes up if there is a supply shock. And gold is number 2. And copper, incidentally, number 3. And the Dixie, number 4. Now, Bitcoin is not on this list, but there are other things that are typically correlated to it. Any thoughts, again, back to you, Mando, on this one? What is the best hedge after such a shock?
I mean, you'd like to hope that it could maybe be Bitcoin in that sort of a scenario. It did feel like copper had an okay bounce on the back of this, and you saw silver attempt to rally, but it never really did. It's kind of like gone back down lower. So gold has been the obvious one, and then you would hope it would be Bitcoin. So I think Bitcoin dominance is increasing right now. That would make sense on the back of something like this.
What's quite interesting with the DXY jumping to 98.6, it looks like people are moving into dollars too. That's also maybe the dollar becomes a safe haven for foreign interests. It's interesting.
Yeah, and that takes us back to, again, the connective tissue between when there's a supply shock to gas and oil, inflation goes up, and then the Fed is reticent to cut rates. The European Central Bank said they need to cut rates. Get ready. We need to cut because this is going to hit us hard. But the Fed under Jerome Powell probably won't. In fact, there's supposed to be a cut in March. That's off the table right now. Any thoughts from anybody on inflation and energy and how that impacts our money? And at Global M2 and US M2 just hit new all-time highs as well. So the money printing is sort of happening behind the scenes.
I'm less worried about inflation right now.
Okay.
I'm more worried about potentially even deflation from what's going on with AI. So this hasn't been my number one worry, that this is going to be a sustained shock. I don't think this conflict will last for months. I think this isn't going to be like Venezuela, but I don't think it's going to last for months. The main thing for me actually has been the other way, that we could be in a situation where we get deflation here, and on a monetary basis and on a fiscal basis, they're going to do to try and combat that.
Yeah. And before we get to the charts, CTO, I just want to cover up a few things which will lead into the charts.
Let's say one thing on the oil.
Yeah.
Because I think some of you guys saw it. We made a video a month ago with a quite interesting observation that in these situations where gold has gone up so much historically, often oil has followed. So that was the thesis. It's about a month ago. And I mean, now it played out again. Now we can discuss. I'm not going to say that anyone predicted this war here. We did not. We had no thoughts about that. But it was just an observation that perhaps sometimes the kind of risk factors that lead to oil buying also lead to oil prices going up slightly later. That was at least the thesis, and now it played out again. So I think that's interesting. And just thought to add that that it's been a few months lag previously, and now it happened again.
We also saw the US ISM came out today at 52.4, up from 51.7 forecast. That's also illustrating that the manufacturing growth, expansion in manufacturing, that's always a key indicator. That's going up.
Yeah. And a lot of what's also interesting is each time we go through this type of terrible, sad situation, a lot of pundits call for, World War III is happening and all the FUD around Europe getting involved, but on different sides. It's kind of crazy out there. But what you can also always take comfort in, which goes back to your point at the very beginning, CTO, is the markets can see the truth. So when you look at all the green today in the markets, those markets are not expecting World War III. So that's another point of calming, or am I reading too much? Because the markets tell the truth. I see you nodding.
Absolutely. I think this is going to blow over, guys. I think so. And that's what the market is saying here as well.
Good. All right, let's get back to the
monetary policy is clear. Under wartime conditions, presidents get more powers. Money will get printed. So I think people are front running that, in my opinion. This is like potentially QE again. COVID, Afghanistan. Now we got Iran. Go ahead.
Bitcoin, gold. Will the correlation come back? Will the digital gold narrative ever return again? Quick fire round just around the table. CTO first. We've been calling Bitcoin digital gold for probably 10 years now, but really, is it? Or does it have a chance? Or let's just consider it a risk on asset.
I mean, we all hope so, right? It hasn't really been during this half year. That's just a fact. Gold has gone like crazy on the risk of thesis. Bitcoin hasn't. So unfortunately, it's not there yet. It's still trading risk on, more like a tech stock or a software company, as Marty, you observed. So I think it will come there one day. I do think so. It is the gold for the new generation, but it's still the old generation in charge.
Good. And before we get into the charts, we had historical 5 red months. The last time that happened that I see was, I think, 2011. And in fact, the 6th month actually began red for March. We've never done 6 red months in a row in Bitcoin in 16 years. Could this month, again, another quick fire round, be the turnaround month, or will it continue to be down only for a half a year? Who wants to take that one?
I mean, it's due a bounce here, right?
Yeah.
Like this has been a really horrific fall in that we haven't really had a substantial bounce. We had that one shot where it looked like Bitcoin was going to go back up to 100K. I thought it was. It topped out at 98. That was your one bounce. We haven't really had that in this sort of range. In fact, the volatility's we kind of smashed down to this sort of level, and the volatility's gone down. So I would like to think we have at least a shot at 80K. You know, break through this 73K, 72K level, and try and go at 80K at least once. So even if we break down, I think I'd like to hope that we've got one more shot at least at trying to get 80K.
Yeah. And it has been a very fast drop with a lot of double-digit percentage drops in times that are normally the best months. So everything, as I've been saying now for quite a while, is everything is very different this time. And you're right, they're due for a pump. And the good news is the ETFs turned around last week. They had their second best month in 3 months. So that's something. It's like TradFi is tiptoeing back into the pool, which is good news. But again, one thing that does concern me, we're going to go to the charts next, CTO. This is CAGRs. I'm obsessed with CAGRs, have been for my entire life. If we look at the old cycles, and again, this is picking a top to top type of idea. So it's not cherry picked, but just comparing cycles from a CAGR perspective. 36% CAGR 2011 to 2017. That is the amount of return compounding each year for 5-6 years. 16% 2017 to 2021 doesn't sound very high, but if you're compounding at 15% plus, you're building a huge position very quickly. And 2021 to 2025 CAGR is only 7%. We know diminishing returns are off, but what's also off is the cycles and the timing of the cycles. But what you get from this mathematics here is the projection could be, if things continue, Bitcoin only going to 170,000 by 2028, 2029, which would be a crushing disappointment, especially for all of those people calling for $1 million Bitcoin by 2030. Now, CTO, let's look at the charts. Let's do your forward projections and let us know, is this ridiculous? Is this thing really going to catch fire? Or is it a slow horse now? That's what we really need to tackle. And it's a prickly subject. I know it's going to crush a lot of people, but we need to address that.
Absolutely. Let's look at
Hang on a second, remove this.
So first we have to, I will zoom in and we will look at the details here, but we have to first note that we are kind of threading water here in a very, very tight range, as Mando, you just said. So of course we need like a major turnaround for this to happen. And what we can try to do is to see if we see the first signs of that. But it's a long distance to go before this is fully, off to the races again. But there are some short-term signs here. And we will look at them in detail. So what we can see here is that each time the price dumped at the lows, there has been a strong reaction back up. So we can see these wicks here, which means that price just briefly go down, then it shot back up again. It happened the third time now here 2 days ago, here on the 28th February. So that is positive. That means that there is some buying interest now. And as Mando also noted here, we are, and James, you also said that we are pushing up against the 70 to 72K level. And we have done so many times. Each time we have been rejected, but now we're pretty close again here today. So if this breaks up now, if we kind of get up here and stay there, not up and then immediately down again, then this starts building a little bit of a bottom pattern here. So here's left shoulder, head, right shoulder. It's ugly. It's not, textbook, but it starts looking in that case like a bottom pattern. If we break above 70 to 72K and stay there. So if that happens, that's a significant event. If we have a confirmed bottom pattern in the chart, that is something new that we have not had since this whole thing started. This situation here where it started going up, it started looking good here, but then it turned and this became a wedge instead then, which is a bearish pattern. But if we get like a real bottom pattern in the chart, there is definitely room for optimism again, that, you know, perhaps it's turning around, at least medium term. Then we have to see, as we talked about on previous shows, the previous bear markets have been longer. They have gone on for almost a year, or around 1 year, and that would put us in October, not March, or February. But I mean, there can still be significant movements up, even if it is not the end of it yet. And I think that those are definitely tradable. And then to answer your question, James, like, is it going to be a slow and boring? Is Bitcoin going to become slow and boring? I don't think so. On the contrary, I think it will get wild swings in both directions, as we've just seen now. We've had like a 50% drop in a couple of months. I think we're going to have more of that. We're going to have more wild swings, plus 100%, down 50%, up 400%. I think that has been Bitcoin's mode of operation, and I think it will continue. That's my bet. And at some point, either now or in October, we're going to turn around, and I think we will be up to several 100,000 in the next cycle. Absolutely.
700,000 in the next 2 or 3 years.
Several 100,000. Sorry for my bad
somebody in the comment here said 180K is the next level that it could hit. And a lot of other people saying we could definitely break a new all-time high this year. Now, the other thing about markets, and Mando, you know this too, the faster it drops, the faster it recovers. And we have the fastest drop ever. You buy into that? So we don't have to wait till October. In fact, the bottom, many people are saying 60K was the bottom, including some top analysts out there.
I don't necessarily subscribe to that. I think normally these sort of chops can last for longer than expected, rather than just be violent. Everyone hopes that you can violently come out of them, and sometimes it lasts longer than expected. So I still think this could be a late 2Q, Q3 thing.
Yeah. All right.
We may just chop for a bit longer rather than like go much lower. Do you know?
Yeah. Let's look at this. This is one of the things I like to look at is the supply and profit on the weekly. And you can see the yellow zone. We're in the yellow zone, which is more than 50% of supply is in loss, which is not good. Again, the wick down has been record speed. We are in the what many people would call the accumulation zone. It's a very good risk reward to DCA or stack here at this level. Marty, what do you think of the supply and loss? And will this market be like historic markets, or do you buy into my thesis the recovery will be faster than previous?
Yeah, I mean, I look at it. I get asked this question all the time. I look at it. These are the ways I look at it. First of all, I believe that the price has come back to the Trump inauguration price. Everything above that was speculative, based on the bullishness of the Trump election, and that was all removed, and we're back to where we were. I also subscribe to the 50% pullback. If you take all-time high and have it, you get 63. I think that also possible that was the bottom. And then if you look at the 200 weekly moving average, we just bounced off it as well. So there's a lot of support that this is the bottom, between 60 and 65,000. And I think we've sat there now and consolidated long enough for people to get antsy and start to want to participate again. And here we go. I think now it's all about an emotional reaction. At what number will people that are sitting in stables that sold at 120, 110, 100,000 start to participate again? And I think that creates the short squeeze. So, and then obviously with the timing of the regulatory stuff, looks like April, May, June, we're going to get market structure. And I don't think people are even ready for what that means. It means clarity on Bitcoin as a commodity. It means regulated exchanges. It means potentially store of value and monetary premium. And then all hell can break loose, and I support the big all-time high numbers, because you don't know. You don't know where to go. Yep.
And all the good stuff I see is the rampage in gold and silver, That's a positive for this asset class. AI drives scarcity. That's a positive for this asset class. We have the perpetual institutional bid. That's a positive for this asset class. And by the way, reminder, that didn't exist before. Okay. So
Correct.
now we're getting money coming in. We got Saylor buying 3,000 as well, just notified this morning. And what else? The drop was record speed, but we didn't have a blow off top. So all of these things point to a shallower bottom in the market and a quicker recovery. In my humble opinion, I could be completely wrong. We could be here for the next 10 years for all I know. But one other thing that is important is this, and you mentioned this, Marty, at the beginning, the accumulation zone. But the other question I always ask myself, is it worth accumulating if the CAGR is only 7 or 8%? You know, I always say you need to get at least 14% per year in your assets to tread water and survive. I know we're picking timeframes here, but with a 7% CAGR, is Bitcoin really that interesting anymore? Steel man me, everybody, because this is the question I would be asking. Starting with you, Mando.
Yeah, go ahead, Mando.
It's always about timeframes, really, isn't it?
Yeah.
I do think that if I look at Bitcoin right now, and I've said this on previous shows, there's something nice about 60K because you're like, well, this could easily go back up to 100K. I do think there was something psychologically above 100K where it was like everyone had to kind of go to that crazy next level, which was like 1 million. And we probably just ran into some supply. We clearly did from long-term holders, and whether they got spooked by quantum or whatever, there was clearly an idea that it was going to be a little bit more difficult to get to the next stage of it. Here, I do look at it and think that this is very attractive from a CAGR standpoint. If you have a long-term mindset like that over that 3 to 5 years, yeah, you want to be buying Bitcoin during these sort of periods. So
exactly.
I do think short term it can take longer, but long term, this is a great time to buy Bitcoin.
Yeah, Mando, we haven't spoken since the Citrini report on Tuesday.
Yeah,
like if you read that report, I know it's a bit doomerish, but it really paints an excellent picture for crypto.
I mean, most scenarios here, I think, paint an excellent picture for crypto with AI because you potentially have massive use case of L1s from agents, particularly if they're given like economic flexibility to do things. And then the second thing is that if you do end up in this sort of doomerish scenario, then you're going to get massive money printing on the back of it. I do think there's probably like a short-term deflation thing there. Like if you look at, I'd be still looking at trueflation figures to see what could happen. But if you start to get unemployment and a reduction in the prices of various different things, then there's no doubt in my mind the Fed's got so much room to print here. It's got so much room. Yeah. So, and that's the case for a lot of places around the world right now. So when we've not been in a world of money printing for a while here, guys. So there's a lot.
Can I just add on that? I mean, we haven't talked since the block announcement. It's literally what we have said here on the show for 2 years, that the companies will lay off half the staff because they don't need them anymore. And then we can discuss, were they overhired? Maybe they were a little overhired also, but so are all other companies. And now everyone will look at Jack and see what happens. Okay, so he laid off half the staff. Share price went up 40% because it started going up before the announcement. Some people bought before and some people bought on the news, and in total it went up 40%. So you cut the cost of the company by almost, not half, but almost half, because a lot of cost is related to the staff, and your share price goes up 40%. So what will every other CEO do now? And you announce that it's AI, what will every other CEO do? They will do the same, and they will try to do it before their bonus KPI counter, because share price will go up. So what will happen then? We will have all these mass layoffs that we have talked about. It's going to happen. And what happens with the companies? Their profit goes up massively. That's what happens, because they can keep selling. They can keep doing the same thing for massively lower cost. And it's happening now. It's happening in 2026. So short term, this will massively boost the profits of a lot of companies. And I think that can lead to their share prices going up by a lot.
Yeah, I calculated that Square or Block XYZ will save $3.5 billion from that move.
Exactly. And then, of course, there's a secondary consequence because those people get laid off. So they don't have any job anymore and no money to buy stuff. And that, could lead to less demand, perhaps. And also over time, if all the companies get reduced cost, perhaps price pressure starts. So they could, lower prices could lead to deflation. But I think short term, this could lead to a massive increase in profits for basically all the companies.
That's already happening. In fact, one of the guys at the Fed, he said he's never seen a market where companies are growing profits, in some cases double digits, when they're not actually hiring new people at the same time, which I'm sure, Marty, you've seen that as well out there, which is a staggering statistic. But anyway, a lot of change is coming. We know the next 3 years will be bumpy before we get to infinite abundance, if we even get there.
The point to make on the blow-off top, people always go, we never saw a blow-off top. It's because we never really had any expansion in liquidity. Since COVID, they've been, quantitative tightening. We haven't had QE. China, on the other hand, has had rampant QE. They now double the US M2 money supply at 50.8 trillion. And they entered gold. We saw them buy gold. So I don't think we've really had that expansion, which supports potentially a blow-off top coming in the near future. Once the Fed starts to print money, we know that the Fed is out on May 15th. We're going to see a regime change at the US Fed, and we might see new liquidity and also being promoted by the actual proof of the ROI of AI. We've been waiting to see actual, tangible evidence that AI will reduce bottom line and increase share prices. Well, I think, like CTO just said, with this block announcement and all of these new announcements of layoffs, we see that AI is actually starting to hit the bottom line. And so the message is true. So the AI bubble theory is off the table. And I think you're going to see massive expansion in liquidity to support it. There we go.
Well, I've seen a lot of mixed reviews about this new guy, Kevin Warsh. Some think he's a hawk. Some think he's a dove. Some think he'll cut rates. Some think he understands AI. Round the table, Mando, Kevin, good or bad for the Fed?
He's certainly not a proponent of money printing. Let me put it that way. He's more dovish in that he thinks that rates should come back, but he thinks that money printing in the form that it's been done in the past is too broad. And I think he's going to be a little bit more specific in his policies. So it's not that he doesn't think in monetary expansion or that he's dovish. It does seem like he's more dovish, but perhaps using different tools.
Interesting. Good. Let's talk about this guy, Grant Cardone. He has become a huge Bitcoin bull, but he used to be a gold bug and a real estate guy, if I'm not mistaken. But he said if you try and sell 10 million in gold, you'll only get 70% of the market price. Bitcoin is the real thing. And he's a guy who knows about precious metals for a very long time. As CTO, what do you think of this statement? If we are talking about the thesis of Bitcoin being the new gold, I know if you have paper gold or a gold ETF, you don't take a 30% hit in the shorts. But if you have a gold bar you're trying to sell in the store, it's impossible to sell.
Yeah, you need to organize that in a good way in that case. But I think it's like we've talked about here, guys, since the very beginning, Bitcoin is a better gold.
Yeah.
And I think in the end, everyone will arrive at that conclusion, but it will take time. That's my take.
Good. Any thoughts, Marty, on gold? Selling it? Having it?
Grant's 10x company is just up the road here from me. I see him all the time and his team. They're very much like big time shillers. Very, very outspoken people. They push real estate. They push all their things. I'm not sure. I've watched his show many times. I don't think he's very technically knowledgeable, which always worries me. I think like Michael Saylor has become more technically knowledgeable about Bitcoin over the last years. And I believe he's, to me, I gain more respect when the talking heads can actually talk on the technology rather than just the monetary or asset side of these things. And Cardone is very unimpressive. Did you see him when he had Saylor on his show? It was kind of embarrassing. I had to turn it off. So I'm worried he's just like a Tom Lee character, James, honestly.
Yeah. Okay. We'll get to that as well. In fact, you just stumbled on Saylor. He just bought 3,000 Bitcoin. A chunk of that was using STRC, the preferred as well. And now they hold 720,000 Bitcoin, which is almost the same amount of Bitcoin that IBIT holds, BlackRock ETF. So we do have that perpetual bid coming, and Saylor's rubbing his hands together because he likes to buy at these levels because it brings his cost basis down for the first time in a long time.
100%.
So that's interesting. And then we have another player, Tom Lee, $7.34 billion underwater. Mando, how do you explain that to shareholders?
Well, he did exactly what was said on the tin. Like, that's just ETH's price since he started. Obviously, you can say you should have got a better entry, but I think it's one of these things. Like, if you're buying a DAT, then expect to get the performance of the underlying asset, and I think the vast majority of it is to do with that.
Yeah, and
I'm not these DATs. I think there was a piece out yesterday, which is like the only DAT which is not underwater is the hyperliquid DAT. I don't know if that's the case right now with all these sort of rallies, but by and large, it doesn't feel like they've been the most successful experiment in crypto, have they?
Yeah, well, I said years ago that if anything was going to trigger a bear market, it would be the DATs selling their crypto. But it looks like we hit the bear market before that actually happened. But some have been forced to sell and liquidate, including some miners as well.
I think there's two kinds of DATs, though. I mean, not all DATs are the same. It's like saying all crypto is the same. Some DATs that acquire, treasury assets that don't have any use cases, which rely on store value, will suffer when store value narrative is off the table. But some DATs that rely on yield from adoption are salivating at the market structure and clarity and adoption of stablecoins and tokenization, where they'll actually make their profits as validators on those networks. So I think they're very different.
Yeah,
not all DATs are the same. That's the point.
In fact, if you calculate the amount of world's capital that Saylor and MicroStrategy own, it's like 0.000007%, which may sound like a very small amount, but the world's capital is a huge bucket. So if Bitcoin recovers, he will look like a hero once again. Again, relentless stacking, pulling all the money in, but it must be a very hard time for Tom Lee. And that's the importance of, timing your buys as well and not getting into top market. One other thing that was kind of interesting is Vitalik Buterin has been selling a truckload of ETH at the market bottom. Like we're talking 20 or 30 million last time I looked at this wallet.
Mm-hmm.
Any idea why he would sell the bottom? CTO, why would Vitalik sell so much? And he lives a pretty simple life. So what's he going to do with $30 million all of a sudden?
He's done this stupid thing from the beginning. He keeps selling many times over and over to finance different projects and different stuff. It's not, I mean, Vitalik is clearly one of the brightest minds in mathematics in our generation. I think maybe he's not the brightest mind when it comes to understanding people everywhere all the time. Like the signal of selling like 100 times, each time you open X, there is a note of, Vitalik has sold Ethereum. Like for years and years, day after day, week after week, month after month, there's always some news about, the creator is selling ETH. He should have sold all of it in one go instead and call it a day instead of keep selling. So I think it doesn't really mean so much. He's kept doing that always.
Well, if you look at his actually Arkham account, he typically sells closer to the top of markets. This is the first time he's ever dumped a big chunk at the bottom. Like he sold a lot before the bear market hit in 2022. And this is the biggest selling event ever he's had since that time frame. So it's unusual. Mando, any ideas why he would be selling so much? And I have a theory. It might be controversial, but he's looking at the transactions and the users on things like Solana. He's looking at AI agents. He knows that his chain is too slow for AI agents. The writing's on the wall. Whoever is the best, cheapest, fastest, most secure chain, I don't know.
I don't think he's selling because he looks at Solana. I think he said he is selling to like fund some form of research. He said, but like he's been selling forever. Like,
but not at this pace. Yeah.
What I would say that I quite like about Vitalik and even the ETH Foundation is that you know when they sell. What I would say about half the other L1 foundations out there is that you never know when they sell. They do it for a centralized exchange. Vitalik, if he wants to sell, Vitalik's made something which is worth what, 150 billion, 100 billion. Like he can sell if he wants. I do think that why he's going to sell, no one's going to believe him. But he said he was doing it to fund some form of research. I think.
In fact,
quantum or
in fact,
I won't read too much into it.
His wallet is only 490 million as well, so he's technically not a billionaire, and you'd expect he would be, considering the size of ETH. Or does he have other wallets too?
I'm sure he has other wallets.
He's only sold 7.58% of his ETH. So I mean, it's fair to look at it like that. I mean,
he used to have 700,000 ETH, and now he has 224,000.
224,000 ETH, right?
He sold 2/3 of his ETH already.
Oh gosh.
Yeah. Anyway,
well, that's a bit astounding.
So back to the big story. People want to know, and I opened this can of worms a couple of weeks ago, and I said, the odds. I think Solana was at $70 around at the time, and Bitcoin is about 65K. I said, what is going to double first? And I said, Solana's going to double first. It's much easier for Solana to get to $140 than for Bitcoin to get to 140,000. And those numbers kind of ring true. CTO, if you were a betting man, which would double first?
Yeah, so when comparing to coins like that, if I can show the chart, handy tool is the coin, sold to BTC chart in this case. So I don't know the future, but many times we can get a clue what is going on. So for sold to double first, it has to go up, right? This chart has to go up. That means that the sold to Bitcoin chart has to go in this direction. Then Solana will increase more than Bitcoin does, regardless if they go up or down in dollar terms. And we've been in this downtrend for quite some time, since when was it? In beginning of November, 2nd November. But we do have a sign of a turnaround here. If you guys look carefully here, you see that there is a small bottom pattern here. And it retested this neckline and it's held. So this could be the first signs of a turnaround here. It is still, it's a long way from here. This pattern here is still small, but it could be the first signs of a turnaround. So I think that this is the point where everyone logs out. They've given up on Bitcoin, they've given up on Solana, they've given up on everything. That's the point where it can turn around. So I'm actually very excited. It's early, we need a little bit more, but this could be the turnaround of this chart. So
exactly. When the last optimist gives up, he said 2 weeks ago.
Exactly. When the last optimist has given up and sold, if that is, Vitalik for Ethereum, I don't know, but that's literally a point where it turns.
Yeah, awesome. Marty, any thoughts?
In my opinion, obviously Solana will double first. I think just based on any catalysts, and they're all stacking up right now. And market structure will be the main catalyst. I think once market structure passes, Solana will see a major bid on hundreds and hundreds of new validators. And I think Bitcoin will require more of a macro push. So maybe a long sustainable push, maybe by year end, something like that. I think it'll lag a little bit behind to get to double. But I think Solana to 178, 180 takes 1 or 2 catalysts. We've seen it happen before.
Exactly. I'm trying to pull up a quick chart here. And Amanda, you believe, like you did last week, that Bitcoin is the stronger horse?
Yeah, what I like around crypto is still the application layer. There's been a bit of a rise in some of the AI meets crypto coins over the last few weeks. The best performer is actually this coin Venice. I don't know if you're familiar with that, but it's like an LLM layer, which is now being used by OpenClaw, and it's a crypto-based project. Eric Voorhees is kind of well known in crypto circles as one of the people behind it, and it allows you to basically have more privacy with the questions that you ask LLM. Make sure that your data is not stored on the LLM side. That's an application, and you can use the coin for use for that API. That's up like 3x in the last month. I think that is still the sweet spot for alts. It's not the L1 layer for me, really. It's applications. Hyperliquid had a great weekend. Again, bounced straight, one of the best performers because people were using it. So when I'm looking at alts right now away from Bitcoin, it's on the application layer.
And that was a big thesis that we debated for years now at this stage, is follow the money where the money is made. And for much of last year, the two places where all the money was made in crypto was Hyperliquid and Solana. So DApp and a layer one, although some people call Hyperliquid maybe a quasi layer one anyway unto itself. But where will all the value be captured in the future? Should people even mess around with layer ones now, or just go straight for the dApps?
I've just found that I've lost money more on the L1 trade, even with massive adoption, than I have on the application. The application layer trades I've generally done much better with, and I still like that point, because if you start to see stratospheric rises in the amount of use case of crypto meet AI with agents and with various other forms of connections around decentralized compute or these sort of LLM systems, I think there's going to be some crazy things that get built.
Yeah. And this is a chart I just pulled up. Actually, I'll make ourselves small. This is the amount of market cap per transaction across all the top chains. And you see some very interesting things. You got a big bar is not a good thing. That means a lot of market cap per transaction. But if you're looking at layer ones, you got Near Protocol, Solana, Sui, Avalanche. They all seem to be kind of in the value zone. Other ones where there's not a lot of users, not a lot of activity. Again, going back to square one, where will the value be captured? Now, there was a thesis as well. There was a paper, you probably read it too, Marty, from DeFi Development Corporation.
Yep.
Their price prediction model for Solana up to 10,000. And their thesis is, when this thing takes off and there's a lot of on-chain action on a layer one, especially with so much being staked, that will drive demand for the token through the roof and also burn a lot, which will further decrease the supply, which would drive the price up. Do you believe in that? Or do you believe with Mando's thesis we should be in dApps?
I'm an L1 guy. I think that at the end of the day, agentic finance will be the big catalyst, and market structure. I think there'll be two regimes. We're in the pre-market structure regime of crypto now. Where the dollar price is very much coordinated together with Bitcoin. Like Solana is literally one-to-one with Bitcoin. If Bitcoin moves, Solana moves. But Hyperliquid, on the other hand, has sort of its own direction, right? It does its own thing. It's not as correlated to Bitcoin. I think this is all just regimes. So there's previous regime before structure, and then there'll be a regime after structure. And I think it'll be very different correlations, very different markets, very different fundamental valuations, and things like that. So I don't really put a lot of value in understanding price before market structure. In my opinion, it's highly manipulated. What I do know, though, is agentic finance is going to explode. Thousands of X. And you got to look at the L1s that are probably going to service that. And that's going to be Solana, Hyperliquid, Sui, things like that. And to me, those are the bets right now. The bet is agentics. I think the burning of tokens, the token appreciation, the amount of tokenized value coming on chain to be traded by agentics, it's just overwhelming. And so, in my opinion, I don't really put much stock in looking at valuation before market structure. I think it's all speculative. After market structure, I think we'll see a whole new market.
Exactly. CTO, do you believe in this agentic world and quadrillions of transactions per week run by agents alone?
Oh yeah, I think none of us, we can not comprehend how big the AI transformation is going to be. I mean, we've talked about it and we've said the words. I think even I can't comprehend it. It's like Elon Musk said that, it could be 10 times better each year. Like, who can comprehend that? We can see it like in the video generation, for example. Like 2 years ago was the Will Smith eating spaghetti and, the funny one. And then 2 years later, or, not even 3 years later, there's like Hollywood grade cinema production, and you basically type the prompt into TikTok and you get it out. It's like incredible. And then imagine if it is like 100 times better, 1,000 times better in 3 years. What's it going to look like? It is crazy. It is crazy. And like we've said many times, for sure, these agents, they can do more if they have resources, if they have money to buy stuff, buy services, buy, other products, something that costs money to do or get. data or some expertise or meat market or whatever it is.
Meat
right?
puppet, yeah.
So yeah, they're gonna need money, guys, and they're not gonna use credit cards with each other.
Nope.
For sure, of course.
Or
they're gonna
PayPal.
or PayPal, exactly.
Yeah, there's a rumor Stripe is going to try and buy PayPal too. I don't know how real that is. But in other news, another top question coming in from people right now is when to deploy dry powder. Obviously, people should have been layering in my opinion, since the big dip down to 60K. Good to start building a position. Maybe don't blow all your cash. Always keep dry powder. But what do you recommend right now for people, if anything at all? Keep starting to stack, starting to deploy some cash into some positions, or wait another 6 weeks, or wait for the ETFs to turn around, or wait for the global liquidity pivot, or wait for some new correlation that we don't know. The market has been really bad. Q1 2026 has been awful. We've had, to my count, exactly 5 gray swans so far. Everything from the SaaS apocalypse to what just happened over the weekend. What do people do? Mando, to you first. Don't forget, by the way, links below for these legends. Subscribe to them all.
Thanks, James.
I think when you're in a range like this, volume should happen at the edges, not in the middle. I think you can get really badly hurt if you try and chop yourself up in these sort of ranging periods. So either look for a breakout or look for it being smashed lower and you're buying support. So this exact range, like if you're talking about right today, I don't know if it's like the best time to buy. I've been looking at things that have been breaking out of like longer term channels, of which I've kind of said on the show. So Hyperliquid kind of did that, and then recently this VVV did that. But then on a more macro basis, there's not that many things right now. There's maybe just gold that looks like it's about to break out again to another all-time high. Bitcoin, for me to really go back in and buy a ton more, I'd like to be buying it breaking out here, because I just think it's been in this range a few different times. So I'd look for it around the 71, 72K level if it started to break through, and then hopefully it goes up to like the next level would be low 80s for me.
Awesome. Good stuff. CTO, tiptoe in.
Well, so what I'm doing, I cannot tell anyone else what to do. What I'm doing is that I, exactly like Mando said, try to buy the breakout, tight stop, because the trend is down. So everything I'm doing is kind of a little bit of a gamble. But I try to buy a breakout where there is a clear invalidation close, so I'm not risking much. Then if it goes up, I can try to do the same thing again. Or buy the support bounces. I did buy there, what was it, 62,000 something on the first time it went down and bounced there. So I guess those are the two strategies. It is exciting now, but it hasn't broken out yet. I want to see a breakout first, exactly like Mando.
Exactly. Marty.
I already pretty much got back in all my spot positions at the lows. But, I watched the ISM. I think the ISM reading of 52.4 today is indicator that we probably are reversing a trend, in my opinion, moving into expansion. I think, like I said in the beginning of the show, if we get a 7 in front of the number, I think a lot of people will enter again. And so I kind of agree with the guys. I think a breakout right here is the trade. Once again, we expect the 50% pullback here back to 67,500. That might be a key entry right there. If we break down all the way back down, we test support at 65. If we lose that, then, we go back into accumulation again, start to DCA again, just stick to the discipline.
Yeah, the economy is expanding in the business cycle, but it's expanding because of data centers. People need to realize that it's not a broad-based expansion, but still the correlation between Bitcoin and ISM has been very good historically. Let's get into one other story. There was a little bit of consternation last week. People looked at your video, CTO, on Tesla. It's like, ooh, CTO is doing a Tesla video. What does he say? And a lot of people misunderstood it. And, sometimes people trade based on thumbnails. They based on the first 15 seconds, etc. But one of the things I do know, I've been studying this company incessantly for about 9 years. And I have some insider tracks as to what's going on. And, we did a video on Saturday with Cern Basher with your data, by the way, and rebuilt it. But any thoughts on where we are today, CTO?
Oh yeah, I love the videos. It was great fun. So thanks for doing that one. And I think that's really the strength of this group here, that we can bring different perspectives and hopefully everyone can combine them into some conclusions for themselves. And I think that I thought about it. I watched it carefully. I really, really, really liked it. And I think it exactly proves what was my point with the video. I think many people misunderstood it, because my point was that it's fairly difficult to predict something like Tesla far out into the future. So different analysts will come to wildly different numbers. You simply can't take an economic model. Like many of these analysts, they're economists, right? They want to take some financial data and arrive at the future. While you just can't do that. You can't take some EBITDA figures or some revenue growth or whatever, PE ratio, exactly, and arrive at how many Optimus is Elon Musk gonna sell in 2030 or 2035. How many cars will be driving themselves in different forms? We will have FSD subscriptions, we will have robotaxis. How's that gonna look in 10 years? You can't take economic data and arrive at that conclusion. So different analysts here will sit with something like the things we did here and arrive at like wildly different numbers. And they will then have violent mood swings over time. Like some small indication will come and they will panic. They will drop everything. They will update one number and they have to go and sell everything. The stock will go crazy in one direction. Then the next day, something happens, some announcement, people feel the magic and they feel, but actually this is going to change the whole world. I have to have a share in this. We have to buy. And share price goes up 3x. And that's exactly what we have seen so far in the Tesla stock. Like the first time I did a similar model was when, remember guys, all of you who were following it in 2019, there was this whole movement, Tesla Q and so on, that were predicting that Tesla was going to go bankrupt. And I walked around and I said that, but it seems like they're actually selling cars, and you can go like Google, are they making profit? Yeah, they're selling cars. They're making some money on selling cars. So probably it's going to go up. And it went 3,200% after that, I think. Then it dumped 75% down. And then it went up again, I think 3x. And then it's like down 50%. Just last year we had down 50%, up 120%. And my thesis is that it could get at least as wild, probably even wilder, because true self-driving and robotics is even more disruptive than making a petrol car electric. So I think that this craziness and this divergence of model is going to continue. And I think that's one of the greatest opportunities in the whole market for that reason is Tesla. My point with the video is that I don't think it will go in like a straight, slow moving line up. I don't think so. I think it's going to go like this for exactly that reason. Different people will have different models and no one knows for sure. I don't know. CERN doesn't know. You don't know. We don't know for sure how many Optimus Elon will sell in 5 or 10 years. We have different guesses. And I think that's really the conclusion. The trend today for Tesla is up. The Larsen line is gold for Tesla. I have Tesla myself. I don't think it's going to go to zero if that was what someone thought. On the contrary, I think it's one of the best opportunities in the market.
Exactly. I've never seen a company go after so many large total addressable markets with an untouchable moat and position. AJ, top Tesla analyst as well, believes there will be 48,000 robotaxis by year end. And I'm a bullish guy on Tesla. My projection is 5,000. He says 10 times that. And if that happens, conservatively, that'll add $178 to stock price. So, and that's just one piece. And we have other things like the Tesla Semi coming and Optimus robots. I know for a fact there are way more of them running around than we realize. And they are sublime, allegedly.
It could get even wilder. I saw 30,000 in one of your slides, James, in the video. So, it's possible to make realistic. That projection you did was not unrealistic. So it could get even wilder, right? That's what I mean. That
it'll be a fun time for sure. And I think it is the best risk reward out there. And I've been saying that for a long time. All right, quick lightning round. There's some talk before we wrap, everybody. This is a weird one. Brace yourselves. Not this one. Hold on. Hang on. Remove that. Sorry. Remove at the stage. We'll forget that one. A lot of people are talking about aliens. This is kind of like a fun question to get your brains going. Mando, to you first. If aliens were confirmed tomorrow, and there's a lot of chatter out there and it has people nervous, what happens if we find out, yes, there are aliens in the universe and they're looking at us and observing us? What asset would you like to be in?
SpaceX stock? I don't know. Like, it's a strange one. I've seen this poly market has been rising, right? Something like 17%, 18% now. Before 2027 that they're going to confirm that aliens exist. Does it really matter? It kind of feels like likely that some form of alien life exists to me. So maybe just companies that are involved in space exploration.
Yeah, interesting. I think things like maybe underground bunkers, etc., would be very popular. Marty, what do you think?
I mean, I think Bitcoin will absolutely moon, if aliens are proven real, just because there'll be a complete lack of trust in government, central banks, fiat currencies. I think that entire narrative just kicks in big time. And this was actually spoken by Helen McCaw. I don't know if you follow. She's a Bank of England analyst. She said the same thing, that if this exact same question, she said Bitcoin could surge if the US confirms aliens exist.
Yeah, well,
there you go.
Yeah,
I mean, obviously, defense, all the defense stocks obviously will go off on fear. Space tech, like you said, gold, probably classic safe haven. Things like that. Alien meme coins.
Yeah, with aliens.
UFO coin, alien Pepe. Do you want to come up for them?
It's kind of fun because I see it along the lines of quantum risk too. That would break everything, and all trust would be gone, etc. CTO, what would you, if you had one asset to be in, if we discovered aliens exist, what would it be?
Yeah, good question. I haven't thought about that. Yeah, I guess we need some space weapons then. So we need Elon Musk to, fire up the space cannons or something.
Well, space defense is a sure thing, and we've heard that from the U.S. Department of Defense already.
Actually, I say one more thing that was, I think a lot of people missed in my video. They thought I'm against Elon Musk or something like that. But at the end of my video, if you go back and watch it, I thought back of all the sci-fi from my childhood and how it has basically all of it come to life. And except for Bitcoin, all of it was either telecom or it was Elon Musk. Elon Musk, except telecom and Bitcoin, Elon Musk done all of it. All of the sci-fi that actually became true, it was Elon Musk who did it. If you go back and check, they were all, I didn't say it in the video, but it was actually Elon Musk. So I guess if we get aliens, it's him who has to, build the defense as well. Yeah. Because that's the only thing that's missing from Star Wars. We don't have the space cannons properly.
And he did say, by the way, if aliens did exist, he'd probably be the first authority to know that they do exist, and he would tell you that they exist in real time. But who knows? Who knows? The odds are funny. Markets are funny. The human mind is fickle. Big thank you to everybody here. Thank you to the mods in the chat. Shout out to AR, Ron, and B-Man, and Blazo, and Blazo again. And Marty, and CTO, and Mando, links below. Guys, buckle in. This is an interesting, this is a make or break time. Literally, some things are up. Not just gas is up 50%, natural gas, but markets are pumping. UPXI, Upixi. This is funny. Upixi, I had a question a couple of weeks ago. Is it going to go to bankrupt? And I said, no, it's not going to go bankrupt. They have their house in order. It's just gone up 30%, and that's the Solana debt.
Oh yeah,
that is nuts. So actually, the DATs are really. I got this top 300 list of things. The DATs are doing very well today. Ondas, which is a drone ship maker.
It's an interesting day, James. Got silver down 10% and Bitcoin now nearly up 10%, just about hit 70. We didn't see this coming, Monday, March 2nd, after a war.
Marty, you didn't see it coming? Come on.
I mean, I didn't see this Monday. I thought there'd be a drastic downward action on the Middle Eastern war. But you see, that's the thing with these assets, is they come out of nowhere. War can often be a stimulus for anti-government things.
It's a crude expression I learned in early 1990 was when the rockets fly by.
There you go.
It's always the nerves before when the markets know things are about to go down, but that's the time to enter the market when fear is maximum, which you can apply to many other things as well. Big thank you, gents. Try keep this to an hour. Have a great week. I think, CTO, you're out next week, correct?
Yes, exactly. Unfortunately, personal
Okay.
reasons, I'll be out next week. I will be back the Monday.
I have a very special surprise guest from the UK. So he's been wanting to come on for a long time. It's going to be brilliant. Mando, one of your
Stay
kin.
safe out there,
Almost.
everybody. Stay safe, please.
Thanks,
Stay
guys.
safe.
See ya.
See you all.